Hello, hello, hello. Just want to pop in really quick. It's Sunday. So we're going to be analyzing the market. I'm not looking to get into any trades. We're just going to be, I'm just looking at what's going on in the market and positioning myself for the week. And so I want to share that with you and just kind of give you some views of what I'm actually seeing in the market and how you all can position yourselves as well. Also, before we begin, I want to make sure I let you know that after this video, I'm going to be dropping another video on setting the alert, because the alerts is a pivotal aspect of our trading plan. And so I'm going to be demonstrating how to set the alert inside of TradingView. And for those of you that do not know, you do have an option to utilize the Easy Indicator Dashboard app that you can download to your phone that will also give you an alert on an indicator. That's the key, on an indicator. And so you can utilize either one. The TradingView option would be $29.99 a month, and the app option will be $3.99 a month. So hey, do the math, right? As long as it's working for you, and I know those that are using it is working for them, so it should be fine. Also, this week, as a matter of fact, what I'm looking at, I'm going to put something out officially, but this week I wanted to, yeah, a trading group session. So basically, those that want to hop on, we'll hop on, and we're going to be just looking at some pairs to see what setups are available, incorporating our trading plan, of course. And I'm looking at doing that on Wednesday. But again, I will send out an official notice about the time and the day. But Wednesday so far is what I'm looking at. And it also gives you an opportunity to ask questions and things like that as well. So let's look at the week and see what is locking here. What's locking here? Now, what I would say is, because I did some back testing over the weekend, of course, and what I have noticed is that the euro pairs have a long bias. They have a bullish bias. They are positioning themselves to make a bullish run. And so what I am going to be concentrating on more so this week is my euro pairs. Now, I do trade USD JPY. That is kind of like one of my pairs, and I'm probably still going to do that. But yeah, capitalize on the run. And like I said, a few euros are positioned for a bullish move. And so we're looking at here Euro USD. Let me move me out of the way. Euro USD is actually bullish, right? As you can see, it's bullish. And when we let me say this, when we are going through our pairs to identify the pairs that we want to trade, what we want to do is we only want to identify the pairs where the triple arrow has not populated. We only want to identify the pairs where the triple arrow has not populated, because what that tells us is that we still have an opportunity to capitalize on that particular run, because it would not have hit the alert. It would not have hit the alert. 99% of the time when your alert goes off, the triple arrows would have already appeared. And that's what we're looking for, right? That's what we're looking for. So in this case, it already happened. I'm not gonna say we missed this move. We have not actually missed this move. Now let me just kind of give you a little training here. So when these things happen, when the alert has gone off and you got your triple arrows, you may feel like you missed that move, but there is always a point of entry, And what we're going to do is utilize our confirmations that's in the Trader Made Easy trading plan. If we're buying, we know that we're looking for a bullish candle. We're looking for a bullish candle to break the 50 and close above the 50. And then what we will do is align that candle up with our MACD. Now remember, the alert would have already gone out and the MACD is, continuing to penetrate upward. So it's not like you're going to get another alert at that time. The only time you'll get another alert is if the MACD rallies back down and then it comes back up, because your alert would you would have identified your alert to notify you when the MACD, the blue line, crosses up. So if it already crossed up past your price point on the MACD, then and continuing in the upward move, you wouldn't get another alert. It's only until the MACD crosses back down, which you won't get an alert when it does that, because your parameter says to alert you when it crosses up. So when it crosses back down and then rallies back up, you'll get another alert. So that's how that works, right? So you'll always be aware that price has met your criteria. We don't have to jump the market and all of that. Wait for price to meet it. Okay. So that's what we're going to do. We're going to wait for it to break and close as a bullish. And our MACD is in bias territory, which it means it's above our center, right? It's above our center. And the closed candle is not closing right on a resistance zone. Now, because we have this resistance area here, if this candle, for instance, and I'm not suggesting anyone take this trade, I'm just really doing some training, but if this candle closes above the 50, what we would do, provided all the other confirmations were met, we will measure the close of that candle, because we will be waiting for it to close to verify that it actually closed above the 50. So we will wait for the close, and from the close of the candle, we will go up to this resistance area right here. And we'll measure the distance in pips. What we're looking for is to see if we can clear at least 20 pips. And in this case, we can. At this point, of course, that will be different if it closed above it. And so we can take that trade as long as it clears anywhere from 13 to 20 pips. We can take that trade for the 20 pip strategy. And if it's less than 20, just to solidify your position the more, what you want to do is drop 2 positions at 10 pips and you'll be fine, right? And when you do that, you want to make sure that you adjust your lot size as well. So if you're dropping 2 positions, whatever your lot size was going to be, just chop it in half. So if you were doing a 50 cent lot, then it would be 25 cents per trade. If you were doing a $3 lot, it'd be $1.50 per trade. And that way you're not over leveraging your account. You're still in a safe zone, and you're not, you're operating with really good risk management, right? Okay, so that's what I expect. Nothing's going to happen until it breaks and closes, and then I'll come back and I'll assess. So that is Euro USD. Here's the other thing. I want you all to remember this, write it down, put it on your computer so that you can ask yourself this every single time you trade. Every single time you come to the market, you want to ask yourself these 3 questions. You want to ask yourself, where am I? Where am I? Right? Right now, where am I in price? Identify where you are in price. Then you want to ask yourself, well, how did I get here? How did I get here? Identify that. And then you want to ask yourself, where do I go from here? So with those 3 scenarios, those 3 questions all the time, because what that's going to do is allow you to analyze the market, which will serve you well when you're entering into your trade. So let's answer those questions with this one. Where am I? Right now, we're in consolidation. Clearly, we're consolidating, right? It's just sideways. Okay, market just opened, but still, even before the market just opened, on Friday, we ended in consolidation. We ended in consolidation, which price always ends in consolidation on Fridays. But you still want to ask yourself throughout the week, because price would be different, right? So right now, it's in consolidation. Well, how did we get into consolidation? So what you want to do is look in the past. The most previous move will tell you how you got to where you are. So when we look in the past, when we look back, further back, we see that we had this nice up move, right? We had a nice bullish move. We got our triple arrows, and price went up. It went up and it hit a resistance um, zone, and the resistance pushed price back down, and then we ended the week or that day in consolidation. That's how we got here. We got here as a result of a bullish move that hit resistance and it pushed it back down. So the next question is, well, where do we go from here? In other words, how do we get in the market now? Like, what do we do? How do we ascertain whether or not we should be buying or selling? Well, obviously, we should be buying because we only put a position in based on the big arrows, right? So we know we're buying. But when should we get in? Like, where do we go from here? What we want to do is wait for a break. We're waiting for a break. It needs to break out of consolidation, and it needs to be a clean break above the 50 and close above the 50. And it needs to be in alignment with our MACD, because what we're looking for is bullish territory. We don't want to buy in bearish territory or vice versa. So we want to be clearly in bullish territory above the 50, clearly in bullish territory above the center line on the MACD. Then what we want to do is make sure that we're not closing, candle hasn't closed like right up on your resistance, because what that tells us is that price is likely to pull us back, right? And how you can kind of determine that is from the close of the bullish candle. We want to measure the close of the bullish candle to the previous resistance. So let's say somewhere over in this area, price breaks. So let's say it breaks like in this area here, right? What we want to do is measure the distance. We're looking for, I'm going to just say 13 to 20 pip clear. If you have that, then what I suggest is that you drop two positions at 10 pips each. That way, you're in the market half the time that it would take you to get your 20, right? And that's only because really the momentum is not really strong, hasn't really taken off. So you just want to drop it two times, get your 20, drop it two times for 10 pips, get your 20 pips total, and you're done. You're out of the market, right? And you're on to the next trade. So that is the game plan for Euro USD under these scenarios. So ask yourself that each time, okay? Now that's Euro bullish. Let's go with Euro GBP. I'm just going to look at the Euros. Euro GBP, Euro GBP. Okay, so we're in Euro GBP. I don't think you can see the pair. Okay, so I have to, where's the thing? Sorry. But now you don't see that. Why is this happening? I'm sorry, guys. I don't understand why this is happening. Huh. I don't understand why that's happening, because you don't see the pair. Okay, so, I'm sorry, guys. I want you to see the pair. I don't want this video to be long. But just go. Okay, you saw that I clicked it here. But I want you to back test as well. So we're right here. The fact that it's red and you see the change of the screens verifies that it did change. But so let's rock with it. But still, go back and verify it yourself. We have our triple arrows bullish, right? Bullish triple arrows. So that confirms that we are in a bull move going long, right? And where we are currently. So where are we? That's the first question, right? Well, we're making a rally. We're making a rally up, okay? And how did we get there? We got there as a result of a downward move, and then that downward move was broken. The structure was broken when we had a bullish candle cross over and close. So how do you determine that? Well, you determine that with a trend line. We're going to do just a short trend line too, right? We're going to do a short trend line. do a short trend line. And actually, we can even, bear with me with NT4, I'll tell you. Okay, it's not really what I want. It's not really what I want. Okay, so really that's what I'm looking for. And of course, this is a real short trend line. Typically, I go further out, but I'm looking for the very previous action that was going on with price. And so I see when I look back, I do see that price from this point here, we shot down. From this point here, we shot down. We got our resistance, it hit it, it shot it back down, right? And so we have our bearish right here, barely touched it, went back down. Bearish, wick touched it, went back down. And even though it closed as a bullish doji, it still hit that wick and it basically went back down. So the candle after that actually broke this structure and it closed above it. And that's when the structure is broken. When the structure is broken, then we're looking for price to go into that direction. And that's how we ended up here. Price moving in an up trend, basically going back bullish, right? So that's how we got here. And where do we go from here? Where do we go from here? Same thing apply. We're waiting for our MACD to cross what? Above. So what are you going to do? At this point, you can go and put in an alert right now if you wanted to trade this. Put an alert slightly above the center section, and once it breaks that, hits that alert price, it will alert you. You will come back to the chart, and what you're looking for at that point is to verify. You verify your triples, but you know you have your triples, right? So you verify that you got your triples, and what you're looking for is, did it break above the 50 as a bullish candle and close? That's what we're looking for. A break above the 50. That candle, the active candle that you are waiting for to close, you need to verify that it closed as a bullish candle and that it closed above the 50. And when that happens, everything on the system, the triple average system, tells a story, everything. So you want to look at the totality of what the system is telling you. Meaning you want to look at your trend lines. You want to look at your support and resistance dots in relation to price. So when it closes above the 50, what we want to look for next is to determine, are we less than 13 to 20 pips from the trend line? If no, okay, good. That's because we got space to move. Good. Are we less than 10 to 20 pips from the previous resistance? Because you want to be able to clear that amount of pips between the entry and the previous resistance dots. And if you can clear that, then I will be comfortable taking the trade, right? But you want to look at the totality of what's going on. So that's Euro GBP. Wait for the break and the close and all that good stuff. Euro odd. Euro odd. Listen, it seems, like I said, it's all, seem to be going bullish, right? So bullish. That verified there. We're Euro odd. We bullish move up. And right now, we pulled back, right? Pull back. And where are we now? Right now, we are looking at a bullish move here. So what do you want to do? Put your alert in slightly above the center going up. And when it crosses, you come back to the chart. Come back to the chart. Verify when and where did this candle, the active candle, close? Did it close above the 50 and a bullish candle? If so, great. Great. Obviously, in this case, we have, when it closes, we have a lot of distance between the candle and the trend line. We're good, right? We're good. And then we want to look to, excuse me, we want to look left at our resistance dots. Where are we on the resistance dots when it comes up there? So you're looking left, And from the close of that candle to the previous resistance dots, you want to measure the distance in pips. And you simply just take your crosshair, and if it was this candle here, you'll be measuring right there. It's not. I'm just using it as an example. That's 45 pips. So because we need to be up here anyway. But that's how you basically do that. Now, if you're going for more than 20 pips, by all means you can do that, because price really do respect these resistance, support resistance dots. So what we know is that it's going to hit those areas. Remember, price always moves from one consolidation area to the next. So we know it's going to hit, but what you have to keep in mind is how much drawdown you would have to deal with before it hits. Can your account handle it? Can you yourself handle it? Your risk tolerance. So you have to consider that. That's why the 20 pip strategy is more feasible, if you will. There's a greater opportunity for profit there because the market will give you the 20, and like I said, you can just do 10, two positions at 10, and you can really lock down on it. And a lot of our traders do that, so you can do that. The key is quality, and the key is to build your account daily, seeing your money grow daily. When you use the strategy in conjunction with the 20 pip strategy spreadsheet, you can see your money growing exponentially. The spreadsheet tells you the lot size for the balance, the lot size that coincides with the balance as you're trading. It is 30 trades, not 30 days, 30 trades, and the potential growth in your account after the 30 trades, provided that you are following the rules, right, and doing those great things. So Euro I, we headed uptown. Okay, Euro Chef, right here, bullish engulfing. We have an opportunity here. Put our alert in, wait for it, right, and follow the same rules, because the same thing is the same thing that you're doing every single time. If, let me just make this point because I see it. If your candle, your bullish candle, closed right on a resistance, you definitely want to wait for it to break that level, right? Wait for it to break that level. Okay. Euro GBP, same thing. We bullish right here. And you have an opportunity to put your alert in, and wait for your alert. You know what you're waiting on. You're waiting on a break. We got to pass this resistance area as well, and then follow your confirmations and take your trade. Do your 20, right? Do your 20. Be in and be out. I was working with this pair last week, and yeah, resistance. Price always move from one resistance area to the next, and I do expect for price to reach these zones. But let's move on. Euro, right? So was that all the euros? Euro NZD. I think that would be the last one on the euro. Okay, Euro NZD right here. Euro NZD, it is bearish. So we looked at 1, 2, 3, 4, 5 euro pairs, all bullish. Euro NZD bearish. Not bad at all. So that's what you want to be looking at. Now, even with this one here, Euro NZD, we're looking for sales. That's all we're going to be looking for, sales, because it is a bearish market on the hour chart right here, right? So again, ask yourself, where am I? Right now, we look like we want to come on up. We hit a support dot right here, so we look like we want to come on up, right, a little bit. And even though is bullish, is still in bearish territory. So if I want to sell this market, what am I looking for? I'm looking for a bearish candle to break. I'm looking for a bearish candle to break below these dots right here, to be quite honest. Okay, looking for a bearish. We verify we in bearish territory because it's under the 50. We verify on the MACD that we in bearish territory because it's below your center line. Then we want to make sure that we're not closing on a resistance support area. We want to make sure that we're not closing on a resistance area for a support area for selling because price is going down. So if it closes on a support area, we wanted to break that area, right? We wanted to break that area. And remember this too, if price closed below, in this case, because it has already made its descent, we're just looking for a bearish candle to close under the 50, and of course under here as well. Okay, and we don't want it to close on a support. If it closes on a support, we want to make sure it breaks that level first before we look to take the trade. You can also drop down. Like even here. Let's take a look and see. I mean, right now with the market just opening, everything is just up in the air. Nothing is really definitive that I would feel comfortable going by. The market is waking up. It hasn't really woke up yet, so I don't know what it's going to do, right? And we want to just wait. That's why I don't trade on Sundays. Mondays, I definitely start looking at the market, which really puts me into Tuesday for as far as the days go in trading. So here we go. So let's look at, I want to move this over to this candle here, right? So let's drop down to the 15 and see what is price doing on the 15 minute. Just want some more data. If you want more data, drop down. If you want more data, drop down. That's what we do. Okay, so we're right here on the 15, and we are technically, because of course we wouldn't have seen what's going on. Now we see it though, so we see it in hindsight. But the big arrow, bullish big arrow, tells us that price wanted to go up, right? And that's basically what it did, and it broke and it closed above. So on the 15-minute, we're looking at a impulse. Basically, is moving with the trend. So we're looking at it going up. So that kind of tells me too that on the hour we are in a correction. So we're just going to wait for it to continue to correct itself, and after the correction, we'll have our indication that it's ready to go back down into a continuation. Now, one of the things that I'm going to be doing, I think I mentioned it, the exclusive training. Forgive me. I'll tell you, sometimes I have fog brain because I'm constantly on the charts, but I love it, so I'm definitely not complaining. But if I didn't mention it, we're going to be having some training on engulfing candles. Very, very, very powerful training that's going to really, 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 really help you solidify your trades and know when to get back in, because oftentimes you may not know, well, okay, we're in a correction, I'm waiting for a continuation, but how do I know that it's time to get into the trade? So we're going to be doing that, and it's going to really just open up, shine some more light on the subject, right? So that is it. We just did the euro analysis. We have 5 out of 6 euro pairs that are bullish, and you still have an opportunity to put your alerts in on those pairs and wait for the magic to happen, guys. So until the next video, I will see you on the other side. Have a great night. Bye-bye.